likelihood that that could be touched or breached. Market expert Mehraboon Irani is also with us on the show. Mehraboon, we've been talking about IT ad nauseum. Let's get in your views as well. What did you make of the numbers, the sell-off that we've seen post TCS's numbers and management commentary, and what would you attribute it to?
At the cost of repeating myself, I think consistently over the last 9 months, I wish to state that I have been very negative on the valuations which Indian IT companies were commanding. No complaints with the companies, their managements, the excellent companies, but the stocks were virtually owned by everybody on the street. You ask anybody, and they were holding at least 2, 3, 4 IT stocks in their portfolios. So they had become completely overowned. Now, coming to TCS, I think absolutely no complaints with the numbers. The problem somewhere where the market is recognizing is the fact that Europe could be a problem. There could be concern over longer term deals. There are risks to the deal pipeline. There could be delays which could happen. That is the problem. Underlying story as far as IT goes is weak. The great companies, but the going is tough. Markets are supreme. The valuations have come down sharply. I remember possibly when TCS announced a buyback somewhere at 4,300, people said, oh, this could become a base for the stock, 3,800, 3,700. Look at where TCS is today. Now, at the present level, if you allow me to state my personal view is, they are all ripe for a bounce. So 3,000, 3,100 of TCS, can it become a 3,400? Certainly yes. Or an Infosys going up 100 rupees over the next 1.5 months? Certainly yes. So a bounce is certainly on the cards. As I mentioned earlier, great companies. But if somebody will ask me, should I take a view and buy into IT now that they have come down very sharply from an investment angle, longer term angle, I would say I personally believe they have not bottomed out. In fact, I had gone on record to state in one of your shows early in the year, early in 2022, that to identify as to where the markets will bottom out, you need to see an Infosys maybe somewhere closer to 1,300 or a TCS somewhere closer to 2,700. And people said, what's wrong with him? What is he saying? I think we are now coming close to that. And before that can happen, or that may happen, and I hope I'm wrong on that, there certainly looks a distinct possibility of a bounce. Now, if you see the NASDAQ and the S&P, the way we are falling, I think if you have a bounce over there, which I personally again believe is very much on the cards, for what reason I really don't know, you could have this IT stocks giving you a quick 5, 10, 15% on the upside also as a from a trading angle. But buying from the longer term angle, fundamentally saying the great companies, yes, they are great companies, have they bottomed out? I don't think so, but they certainly look ripe for a 5, 10, 15% upside. A bounce in the market, a bounce in NASDAQ or S&P over there, and you may have people possibly looking at TCS and the Infosys and the Wipros of the world, and even some of the good mid-cap IT companies. So as companies, they are great. They look good from a trading angle right now for a bounce. But from an investment angle, I would still stay a little away because I feel they may not have it bottomed out from a longer term angle.
Okay, well, that's on the IT space. Perhaps there could be a pullback. You never know. Valuations also look attractive, so there's some headroom over there, especially for names like TCS. Mehraboon, good afternoon. I wanted your thoughts on a stock like Automotive Axles after the Cummins open offer announcement came through. This company, as we know, has had a very good track record. I mean, it's a 40-year-old company in this business. And now with Cummins coming on board, you know, things, of course, there is a strong pedigree as well. As a long-term investor, despite the run-up that we've seen in Automotive Axles, does it still make sense to buy?
Clear disclosure in place that I'm personally holding the stock for the last over 15 years, and you are dead right. I think a lot of potential, a lot of decent products, good company, but somewhere as far as stock performance goes, there have been few periods where it suddenly made you feel very happy that you are a shareholder, but there were, I think, quite a few years where the stock didn't do anything. I think whatever has happened right now is certainly distinctly positive. It's going to have a big brand behind it, and possibly that now that the very fact that they have bought into it, I think the open offer which will be there will be mandatory, will be there for the sake of making an open offer. It could be at a price much lower, but at the end of it, or at the present price, will I buy into the stock? I may not be in a hurry to buy it. But to hold on to the stock, answer would be certainly yes. I think, again, I'm saying it's a great company, old company, and now with Cummins taking over, there are reasons to be positive as far as the longer term goes.
Okay, reasons to be positive. Any thoughts, Mehraboon, on IndusInd Bank? There was a block deal earlier today, and Route 1, which is a very large shareholder, I mean, they used to own 10% in the bank. I mean, the limit which any institution can own, that's now, I think they're down to under 5% or so. They sold about 1.5% or so. But early investors, I mean, any thoughts on this one, IndusInd Bank?
I think we have been keeping on discussing IndusInd Bank as a stock, and my personal view is that I've been tracking this bank for a very, very, very long time. I think when the stock was in the double digit. But having said that, the fact is, when I saw the last quarter results, Prashant, allow me to state that the problems with the bank had faced or had endured for the last 4 years because of some big accounts which had gone bad. I think certainly that problem seems to be behind the bank now. If you look at the pre-quarter update, which you all brought out very well last week, I think the loan growth of 18% year-on-year, 5% quarter-on-quarter, the uptick in retail loan growth is suddenly suggesting of improving margins for the bank. The fall in credit cost also is a big positive. So deposits also grew up by 15% year-on-year, including the retail deposits, CASA deposits, whatever. So I would say that I have been positive as far as this bank stock goes. I have been stating it I was quite vocal on it for the last many months. I think, but we also need to understand and appreciate, Prashant, that an 800 became a 1250 in a hurry. Now, somewhere, I think, I don't know, follow much of technicals, but ask any technical analyst of your choice and he will say technically the stock has become heavy. Now, the correction which we are seeing, maybe because of this deal also, could be possibly an additional reason for that. I think I would possibly wait for maybe another 50 to 100 rupees fall at least, because I've seen a 1250, I've seen an 800. I will not be in a hurry to buy more at this present level, but certainly I will put IndusInd Bank to where it belonged maybe 4 or 5 years ago, in the top 5 or 6 banks, private sector banks in the country. I think last 4 years everything had become bad for it. People were talking it like just any other entity. I think all the problems are behind them. The stock has done well. The results are brilliant. I personally believe the September quarter results also will be good, looking at the pre-quarter update. But adding now after the sharp run-up, I would possibly wait for the stock to shed a little bit of weight before adding personally to the holding as far as what I am holding in IndusInd Bank goes.
Very large block deal, 1.2 crore shares changed hands. That was 1.6% equity, totally valued at 1,440 crore in IndusInd Bank. By the way, you're seeing some big moves in the cement bag. So while India Cements is struggling, that's down close to about 9% as we speak. On the flip side, look at Heidelberg Cement. That's shot up 5.5%. It's picked up on the volume charts as well. So Heidelberg Cement will come up for you on your screen. Star Cement is another one where you are seeing a gain of nearly 4.5%. So let's talk about the cement space. And the news that came out earlier, India Cements is, has announced that it will be selling its Springway Mining for 477 crore to JSW Cement. Nigel is standing by to get us more details on this. Nigel?
Well, JSW Cement has gone ahead and bought India Cement's subsidiary, that's Springway Mining Private Limited. The key asset in this particular subsidiary is a limestone mine that they have in Madhya Pradesh. The total quantum that they mentioned is around 477 crore rupees. Motilal Oswal in their note, they mentioned that they've had a conversation with the management and they expect another 127 crore rupees, which effectively was the money that was given by India Cements to this particular subsidiary, including interest. So the total deal value, they say, is around 604 crore rupees. The impact of this is they could effectively reduce that by close to 20% because the last reported debt number was around 3,100 crores. The promoter intent as well will be read possibly. And what the street will wait for is any kind of clarity whether or not they want to sell any of their other assets. Maybe the Rajasthan asset that they have, which is around 1.5 million tons. Well, it's a step in the right direction, but brokerages, they're not very enthused. Motilal says they reiterate their sell rating, though they've increased the target price to around 180 rupees. Valuations is one factor that they cite. It's trading at close to around 15 times EV upon EBITDA and also $82 on an EV per ton basis. They're saying there's no big capacity addition that they're talking about on the net debt to EBITDA basis as well. Things look elevated. Moving to Novoma, they say the move is certainly welcome, but more needs to be done on the deleveraging front. And if there are higher sales of non-core assets, then they'll be impressed. They maintain reduced with the target price at around 112 rupees from around 103 rupees earlier.
Okay, well, the stock should come up for you. There's a big knock that you're seeing in India Cements right now. In fact, Mehraboon, I wanted to pose this question to you. The entire cement pack, right, not just India Cements because of this news flow, entire cement pack has been under pressure. Demand has not picked up in a great way. Pricing has been under pressure as well. And then you have this behemoth player coming on board as well. What do you do here? Do you stay away from this space entirely or do you look for opportunities?
I personally believe there is going to be a lot of consolidation in the cement space, and let's be honest about it, that a year ago I think not many were speaking about cement, but now a lot of people are speaking about cement, and so quite a few of the cement stocks also have gone up, especially after the deal which Adani Group announced as far as Ambuja and ACC goes. Now coming to India Cement, if you ask me specifically, I have always believed it's a very expensive stock in terms of valuation. In the past, they had major corporate governance issues also. Let's not discuss it right now. But selling the entire holding in Springway Mining to JSW for 479 crores is certainly much below what the market could have put a number to, maybe 600, 650 crores, like what I heard Nigel rightly mentioning it. Now, does it help the company to deleverage? Answer is yes. Is that enough? Answer is no. But we also need to understand that India Cement is working at a capacity utilization of just around 56-57%. So even if you assume that this capacity utilization will pick up and go to 72, 73, 74, 75% over the next 2 years due to the intrinsic cement demand, which is expected to pick up over the next 2 years, it will definitely aid cash flow. It will definitely aid in deleveraging the balance sheet further, and that is a distinct positive. But the valuation, if you look at in the India Cement, despite the knock with the stock has taken today, it's still trading around 18 times EV to EBITDA. Now on FY 23-24 earnings, not comfortable, certainly not comfortable. And if you put a number to it, maybe 12, 13, 14 times, the stock could possibly shed even another 20-25% from it, distinctly possible. So why should I be in a hurry to buy India Cement? The other name which you mentioned was Heidelberg, which went up today. I think 2, 3, 4 weeks ago when the deal of Ambuja ACC happened, I think I had mentioned very categorically that if Adanis are going to make any further acquisition to increase the combined cement capacity to 100 million tons, which they have been mentioning it, I think they are going to target something in central India. That's what my personal belief is. And Heidelberg somewhere believes somewhere closer to that. So maybe the market is putting 2 and 2 together. I really don't know, because if you look at ACC and Ambuja plants and map it somewhere, you will realize there is a big vacuum as far as central India goes for the combined entity of ACC and Ambuja as and when the merger is announced. So I would say that there could be some candidates over there which could be acquisition candidates for Adani's going ahead. And Heidelberg is one of them. Maybe yes. Will the parent Heidelberg come and sell it off? I'm not very sure. But Holcim did it. Holcim was a little passive player. Heidelberg, if they get a price, we really don't know. But I don't have any information on that. But that could be possibly one of the reasons what the market is right now preempting. That certain deals could happen. But on the entire cement space, I remain very positive. The thing is, people have started talking about it. People have virtually gone and bought into it. Somewhere it's become a slightly overowned, a little correction, and maybe. And ultimately what happens to crude. So if crude doesn't go above 100 and comes back below 90, you could have cement stocks possibly again attracting market attention.
All right, 160 lower on the Nifty, so 17,078 is where we are at. Now, Divi's Laboratories is